When you're getting a mortgage, whether it's for the first time, first property you're buying, or whether you're remortgaging, getting another deal when a fix expires or whatever it might be, something I think people often overlook just quite how important it is something called LTV, loan to value. You will have seen this against every single mortgage deal because that's the one that says 90%, 85%, 70%, 60%, whatever it is, LTV. Now, obviously you can't ignore this the first time you get a mortgage because your deposit, how much money you have, kind of dictates what LTV you can get, what loan to value, what mortgage deal that's available to you. So if you've got a 10% deposit, you're looking at a 90% LTV mortgage. So it's kind of there the first time. But as the time you remortgage, it's really important that you look at this again and see whether you can jump through those different LTV, loan to value bands, because it can save you thousands of pounds. Not just in that year that you're doing it right now by reducing your monthly payments, but also cutting how much interest you will pay over the duration of the entire loan. So that's what this video is going to be. I'm going to explain to you a little bit more about how to calculate LTV, some of the factors that might help you move through those bands, and also just how much you can possibly save with this when you come to getting that new mortgage deal. If you don't know me already, by the way, my name is Andy Webb. I blog over at becleverwithyourcash.com and obviously produce the videos here on the Andy Clever Cash channel. If you like what I'm saying, please do remember to hit that subscribe button, that little notification bell. That means you will get told about any future videos I do. Now, when you get a mortgage or when you remortgage, there are a number of things you have to think about. And I'm not going to cover those in detail here because I do want to focus on LTV. But very quickly, it's important to remember that this isn't the only thing that you need to take into account. You need to think about your credit report for a start. You need to think about how much the affordability checks are going to sort of come along. Have you lost money? Are you earning less now than you used to? Are you earning more? What's your spending been like? Have you been affected by the pandemic? Loads of different things that can kind of be make or break of whether you get certain deals, certain mortgage deals, okay? But let's just imagine that you're doing all that stuff. You've done the research, you're getting yourself in a good position here. You're planning to do your remortgage, hopefully 3 to 6 months before your current deal ends. So getting yourself in, ready for this, because this sometimes can take a while to do this, right? So you don't want to leave this until it ends, because if you do, say you want a 2-year fix, that finishes. If you haven't got a new deal already in place to jump over to, you'll move on to the standard variable rate tariffs, and these are often the most expensive ones. So you're going to pay a lot. Even if it's just over a few months where you're trying to get a new deal sorted, it's better to get things done in advance. So that's the general kind of remortgaging, mortgage kind of stuff that you need to kind of think about. Let's focus on that LTV. So as I said, loan to value, it's quite easy when you're getting your first home to work out what your LTV is, because you know the value of the property and you know how much money you've saved up. You know what your deposit is. So as you said, let's say it is a £300,000 house and you have a £30,000 deposit, you have a 10% deposit, therefore you have a 90% LTV. Now, to work it out the other way, particularly when you're remortgaging, you take the value of the loan, how much your mortgage is left, how much you still have to pay, or how much you have to pay if it's the first one, and divide that by the value of the property, and then multiply that by 100. So let's just quickly reverse engineer that example we gave before when you worked out that 10% deposit was a 90% LTV. That's really easy when you're saving up. So let's say same example, you've got that £30,000 deposit. That means you need to borrow £270,000. Divide that by 300,000. That leaves you with 0.9. Times that by 100, you get 90%. Again, that you wouldn't necessarily need to do that the first time you're buying it, but when you are remortgaging it, you've got to remember that you don't just have that same deposit, because you've been paying money into that mortgage for however long you've had it. 2 years, 5 years, 10 years, 20 years, whatever it might be. You've been eating away at that loan. And you no longer refer to this as your deposit, you refer to it as the equity. This is what you have in the property, how much equity you have in your home. So not only have you got that initial money, you put more money in. So of course that equation is going to change from the first time you did it. So when you come to remortgage, it's not about looking again for another 90% LTV deal. It could well be that you've jumped down the tiers, the different barriers. And that's not the only thing that comes into play as well, because your property value could have changed. It might have gone up. Fingers crossed, right? It's gone up in value. That's what we always hope. Might have gone down, so your LTV could drop as well. But let's just assume your property prices have gone up. So all of a sudden now, let's say you've put in an extra 30,000 into the house, right? Well, that would change. If the property value hasn't changed, you've suddenly now gone from a 90% LTV to an 80% LTV. But imagine that the property value has gone up as well. Put it in the equation, see what comes out, and see where you fit on that LTV percentage. Now, this is really important because, as you would have known when you looked at those deals, first of all, the lower the LTV, so therefore more equity that you have in your property, the lower the interest rate is going to be. Pretty much they will drop down in tiers, right? So we know that 100% mortgages don't exist anymore. 95% mortgages are coming back. They are going to be the ones with the lowest equity, the smallest deposit or the lowest equity. Therefore, they're going to have the highest rates. And it drops down in tiers, right? So you're not going to be able to sort of get like a 93% or an 88% LTV. Go from 95 to 90 to 85 to 80 to 75, and then a big drop down to 60. And 60 is pretty much the lowest you're going to go. They might find there's some other sort of mechanisms out there. Some people might not offer all of those different tiers, but you won't really get anything below that. But really what you're aiming for is to get, each time you remortgage, to jump between those tiers. And in fact, when you're mortgaging for the first time as well, getting that first mortgage, if you can get just a little bit more in your deposit to push you into a lower tier, again, you've got access to those lower rates. So I'll give you a quick example of how that can change it. Just looking today, right? I looked at Coventry Building Society. Random, plucked it out of my head. I can't say this is the best place or worst place, just a random, an idea of what you get. 2-year fix with Coventry Building Society. A 90% LTV mortgage would give you a rate of 2.99%. Down to 85% would be 2.85%. Down to 80%, 2.39%. 75 LTV, the next tier down, 1.75%. And then the lowest one, 60%, 1.59%. So there's a big jump down as you go through, which makes it so important to go through that maths. Have a look, double check how much you have put into that mortgage to see what your equity is. And have a look at the value and see if you can jump through those different hoops. And just to give you a quick example, a monthly payment, if you had that 2.99%, 90% LTV rate, you just remortgaged at the same thing, you didn't bother to check the LTV and change it, your monthly payment works out at £1,279. This is again sticking on that £300,000 mortgage property that we're looking at. If you were on a 60% one, it's £728. Now, that's not quite accurate because obviously that's not taken into effect that you would have paid off some of the equity, therefore there's less money in there, so you would be paying back a small amount. But it just shows you there's a massive difference between a 2.99% mortgage and a 1.59%. Really, really important. You're more likely to be sort of moving between the smaller amounts rather than you wouldn't jump from 90 to 60 straight away unless you had a windfall and you could pay off a huge amount or the property has just rocketed up in value. But it's really, really important that you do look at these things. So how do you find out what the change of your LTV is? Well, you'll have a statement from your mortgage provider which will tell you exactly how much money you still owe on your loan. So that's really simple. You can work out exactly what that equity is really, really easily. Now, to work out the change in your property value, this is a little bit more of guesswork in some ways when you're figuring out what you might be able to get. To start off with, just have a look at sites like Zoopla or Rightmove. Now, Zoopla, you can put in your postcode and it will tell you, you find your property and it will give you an estimate of what it thinks your property is worth right now. So you'll know what that is compared to what it is when you bought the property. Now, this can range quite massively. So when I had a look at this recently, it said that my property had gone up between 20k and 79k in the last sort of 2 years. That's a big difference there. That could make a big tell between how you fit between those different tiers. But it's well worth having a look at that and trying to get that kind of idea where you think it might lay. If it looks like it's not going to be too much, well, then you know it's not going to be too much of a difference probably. But if it could be quite vast, then in that, fingers crossed, it could really help you with those moving through those tiers. You could also invite an estate agent over. Difficult obviously during the pandemic to have this proper valuations, but if you can get someone to give you a sense of what they think it's worth, then that also is a little bit more evidence. But none of that really counts for the actual mortgage deal. That will have to be the mortgage provider itself doing its own valuation, saying what they think the property is worth. Now, this happens every time you buy a property anyway the first time, so it's important to try and get this to happen as well when you remortgage. And fingers crossed, then that is going to be what you have estimated from the estate agent or Rightmove or Zoopla and places like that. Of course, that won't happen until you're already going through the mortgage application process. So, don't sort of go wildly overestimate what you think that is going to be, just in case they come back at a lower value and therefore won't offer you that deal that you had hoped to get. So you've got your information about your equity, you've got the information about the value of the property, you've got what you think your new LTV is. And when you then go to look at your different mortgages, make sure you shop around, obviously. Look around, because it's not just the LTV that's going to be dictating what you pay. There will be fees that sometimes come with this. You might want to look at whether you can overpay the mortgage. If you can, if there are limits on how you can do that. The length of the fix. If you want to fix, you might want a tracker. All that kind of stuff, right? But one thing it's worth thinking about, if that LTV, that new LTV you've got comes through in between those tiers, then it's worth considering whether you have got some savings, a lump sum of cash that you can put into it to try and bring you down to that next level. Now that's going to be easier. I'm not going to say it's going to be easy, but it's going to be easier if we're talking at those top end, the higher, more expensive LTV mortgage rates. If you are looking for £1,000, might be the difference to bring you down from, you're on 86 to get you to 85, maybe. Okay. It's going to be harder to get that jump between 75 and 60%. You need a lot more money, obviously, in your savings if you're on, let's say you're on 68%. 8% of the mortgage is a lot of cash. You might be able to do that, but put it into a calculator. There are some great ones online. Money Saving Expert in particular has a really good overpayment calculator, which helps you work out if you put extra money in, exactly how much interest you're going to save, how much is going to bring your payments down, all that kind of stuff. But you can use any mortgage calculator for this. You just basically would put in, how much you are planning to borrow against the different rates. But that is worth considering. Not saying you should do it every time, but if you can do anything, just a little bit more money to push down that rates. As I said at the top, it doesn't just bring down your monthly payments, how much you are going to pay on that mortgage every month, hopefully freeing up some of your cash for other things, but it also will reduce how much interest you pay over the duration of the mortgage. Now, obviously, you can't guarantee that you're going to save that full amount because rates might rise when you've got a 5-year fix. 5 years time, rates might have increased hugely, massively, right? So you might be able to get the same deal again. But in comparison to what you've got elsewhere, it's where you can factor that all in and you will save a lot of money, thousands and thousands of pounds over the whole course of that mortgage. So there you go. That's the LTV, loan to value, explained for you, and why I think it is one of the most important things to consider when you are remortgaging. Let's say when you're mortgaging the first time, as I say, because you've only got so much money in the first place. But if you can, whatever time, whatever's your first, second, third, fourth time you get a mortgage, if you can do anything to boost that LTV, to bring it down so you can jump down to a next tier and give you access to so many much lower interest rates and save yourself a huge amount of money, it is well worth it. If this video has been useful, please do leave me a comment below. Let me know your remortgaging experiences, any questions you've got on other videos you might like me to tackle on this subject. Plus, please do hit that like button, get that big thumbs up to show that you've actually enjoyed this and you've learned something. It really helps other people find this video. Until next time, my name's Andy Webb. Thank you so much for watching. And here are a couple more videos you might find interesting.